Welcome, everybody, to a brand new series that I'm bringing to you called Trader Talks on the Financial Summit Network. Today, we have a fantastic guest. This is take two. We tried last week, but my internet didn't work. The OBS software we tried to run on failed, so we're doing it on Zoom today. I am bloody excited to have the great Fibbo Swanee joining me today. How are you, mate?
I am doing A-OK, Matt. Thanks for having me. This is gonna be fun.
We didn't plan on wearing
Let's
basically the same shirt for the show, but it's worked out all
yeah,
right.
I was just saying after we're done, we go out and chop some trees.
We're gonna go cut some trees. I bet it's colder where you are than where I am right now.
It's not too bad today. It's about in the well, I'm Fahrenheit, so it's 51 right now. So
51,
it's not too bad. So what would that be? Like 20
21.
Celsius, maybe
Yeah.
21 Celsius,
Yeah, I
something
don't
like
know
that.
Fahrenheit. That's
Yeah,
ridiculous metrics. We
yeah.
do we
No,
do
I hear you.
centimeters, no inches over here. All right, there's only one thing we measure in inches over here, and it's not appropriate. All right. Okay, this is going to be a really interesting series. I'm going to be bringing on some of the biggest traders in the world, some of the unknown traders that you might have never have heard of, but are professional traders. I'm a really big fan of the Market Wizard series, and I'm sure most traders know the Market Wizard series. But they're interviewing Paul Tudor Jones and Sam Drunken Miller and these guys that they're household names in the trading game. I'm more interested in people that have made a living out of trading, people who spend their entire life trading. They can support their family through trading. They might have a day job, but their trading is their passion. The person I ever wanted to have on the show was Fibbo Swanee. I've been following his work for so many years, and it's been shockingly good. And I can't wait to get into it today. So the format for the show, I'm just going to run through some personal questions because I want to know what it is, what men and women do, how they got into the industry, and what they like about it, the risk and reward of being a trader for a living. So, Fibber, if you'll indulge me, what sparked your interest in trading in the first place? What got you into
Uh,
trading? What was it?
it's kind of an interesting way of looking at things, but I'd say, I mean, I grew up we were just talking. I grew up outside of Chicago, up there in Northwest Indiana, and one of the things that I kind of noticed, in the markets over there, there was the CME and the option exchange, and growing up as a kid, I would see that on the news a lot. Back when this is way back when we had people throwing papers and like trading in the pits, before electronics came around and took over, right? So I kind of looked at that. I'm like, that just looks really really fun. Like it looks like just pandemonium, people fighting, and it was awesome. So I kind of got my start there, just kind of watching the pits, and I'm thinking, okay, I want to do that. I want to do that. So I went to college. I went to Purdue, and I got a degree in finance. And the interesting thing is in finance they don't really teach you anything about technical analysis at all. There was like one chapter, and it was basically the professors are saying, this is a bunch of voodoo and tea leaves, and you know it's a bunch of crap, right? And so I took that as I took that as it is, right? You learn and you go. But it was it was that spark of just watching people in the pits is what really kind of drove me into wanting to learn about trading. So after I got the finance degree, I worked in Chicago for about 3 years, but it was in finance, and it wasn't really trading, and I wanted to get into trading. So um, I hated Chicago as a place to live. It was just so crowded, and I hated it. But a great city to visit. Don't get me wrong; it's awesome. But I moved down to Kentucky, and I got a job trading cattle. I got a job with a cattle broker, and I kind of fell into a position where the CFO was a trader, and he was hiring an assistant basically. And I was hired, and all of a sudden I'm trading. I was like, holy crap. Like I got into this job, and it was sink or swim. It was like I got into it and just started learning. And it was the cattle and grains market that I was trading that I started to learn a little bit more about charting and technical analysis. And that was it. As soon as I started to go down that rabbit hole, I've been doing it ever since. I was 7 years trading cattle and grains with the largest broker in Kentucky, or actually in the nation. I would hedge about 100,000 head of cattle on a rotating basis. So I'd have to use the futures markets and the grains to feed and all that. And the best thing about it is it was a little private company, maybe about 50 employees, but the owner had a lot of money, so he basically funded me an account to say just trade whatever you want as long as you do well, you can keep going, blah blah blah. So he funded an account. Here I'm trading everything under the sun. I mean, you think about it, I've traded it. It was just like, but I was learning the technical analysis as I went. And the nice thing is he had connections up at the Board of Trade and the CME. So I actually got to go. I never got to trade in the pits because I never had a pit license, but I would sit right outside the pit and and uh and trade from there. And the weirdest thing is I'm right there and I can see my broker right there in the pit, but I can't tell him my order. I have to pick up the phone and call the guy right next to me to get the order in. I'm like, I could just tell them right here, but they had to like do the phones and all that, and it's nuts. But that's where it actually started, was really as a young kid, just seeing the pits and just all the pandemonium. And I've always been a math guy, I like numbers, so I say, that just fits me. It just fits my personality. So
What what
that's what I
what
went with.
what year was this that we're just to put for context? Are we talking
Um,
late 80s, early 90s? Don't give
no,
away
it
your
was
age or anything.
late 90s. I started in 1998 when I started trading.
Yeah.
Yeah.
So that's
Yeah. So
that's really the end days of the pit traders, really. Like
yeah,
that, it was a time.
the
Yeah.
electronic, yeah, there was a little electronic unit on the
Yeah.
side that would just spit out some paper,
Yeah.
that would have orders on it, and that was the start. But the pit was still going.
Yeah.
At least I think the cattle and the lean hogs and I think those pits were still going. I think like the euro dollar was kind of already getting into the electronics, and that whole pit which was like a football stadium, which
Yeah.
is nuts. So when that was going, it was pretty crazy.
And
But
I think the cattle
yeah,
and the livestock and things like that were the sort of the last remnants of
sort of
it in
last
the end.
ones. Yeah,
Yeah.
yeah, yeah.
Yeah.
It took a little while, but yeah, it was just on the edge of that, and then it just kind of evolved into not having pits anymore.
Man, the point of this show is not to talk about myself, but I swear to God, my story is exactly the same, except I was maybe 15 years later than that, and I had the same images, the same fantasies, like that. And all of everything I love is all the 80s stuff and the old 80s traders, this
Nice, nice.
CBOE and all that. And it's much to my chagrin when I grew up and I realized I just sit here in my office and trade. I don't have to go there. I wish those days. It's such a
Yep, yep.
lonely journey now. All right, so how did you transition from traditional markets into Bitcoin? How did you find out about Bitcoin? When was this?
Um, Unfortunately, not early enough.
Yeah.
um, no, I work my day job right now. I'm the head TA guy. So I do trade at work, but I trade, and I trade for myself and trade, trade all in all different matters. But the transition was, I'm working for this energy consulting firm doing TA and helping people, and uh someone brought up, I knew about Bitcoin probably about 2013, 2014, and it just didn't click with me back then. And I wasn't this tech guy that really knew how to get involved and all that. So I kind of kept an eye on it. But about late 15, early 16 is when I started to look at it a little more. And I think what made me jump that hoop to go to the crypto side was I started to do what I knew as, what I like to do in technical analysis. I started to look at it a little more. And I think what it needed was a little bit more volume to understand like some of the patterns and stuff that I like to follow. I wanted to see, um, if the volume started to kick in, and I'm like, and my indicator started working, and I'm thinking, okay, this is starting to become a little bit more of a mature market. So I just jumped in and started trading it based on the same things I trade in any other market,
I mean,
commodities or equities, or
that's
it's
my
the
next
same. Yeah,
that's my next question. Like how
yeah,
how
yeah.
did you how did you find that the TA that you were doing in traditional markets? And you just answered the question. Did you find that transition, what you didn't
It
really
was
start? Yeah, yeah,
it was seamless. I mean,
yeah.
I mean,
Yeah.
I think one of the best markets for technical analysis, at least from my experience, is the forex market. So if you trade the forex market, a lot of technical indicators work really well with those. And I think what it is because it's like trying to forecast the GDP. There's just a billion different inputs that you could have to figure that out. And I think on the currency side, it's the same thing. There's so many inputs of what can move that market, that it's hard to fundamentally try to figure out where that equilibrium price is of supply and demand and all that, because there's so many inputs that I think the psychology side and the technical analysis side works really
Yeah.
well for support and resistance levels, because it's easier to follow the patterns
Mm.
of what people are doing versus trying to figure out that equilibrium price. So to me, when you look at the forex market or any market, crypto is seamless. You
Mm.
go in and it's the same thing. It's people trading, buying, selling. Well, people or institutions or whoever, buying and selling. And I really like measuring psychology in the markets. And it was a no brainer. I started putting it in there. And I'm like, okay, my systems are working. I like it.
Yeah.
So I just kind of jumped in. So to me, it's like technical analysis works in any market that's basically exchange traded, right? If there's actually humans or humans that are, programming algorithms, whatever, there's that psychology in there, and that's what I like to measure, and that's how I trade.
Mm. I mean, it's so interesting you say that because I don't do any fundamental research about anything. I
Nope.
I'm not smart enough. I don't have I can't compete with the entire companies that have a lot of graduate degree people studying the
Mhm.
market, or even bots that are just surmising what like Twitter posts are coming through, or Google Analytics.
Yep.
And you probably agree with me that ultimately the price action will dictate that anyway, right? Like you'll see it on the
Oh yeah. Oh,
charts.
absolutely. I'm a firm believer in it. A lot of people, a lot of times technical analysis when I say it's such an umbrella of
Yeah.
things, but it does get a bad rap a lot. But the way I look at it is I've been doing this for almost 25 years now or more. I can't even remember how long I've been doing it. But it's the it's the outputs. If I'm doing really well and I'm using these methods and it's working,
Hmm.
then you can't say that it doesn't work, because that's all I'm looking at
Well,
is
maybe
price action.
maybe you've been lucky for 25 years and
Uh,
you've been fooled by
I would,
randomness.
yeah.
I saw
If that's the case, I need to be like, owning a casino or something.
I saw one time on Twitter, Peter Brandt made a comment about the RSI, and you just commented back like it's been working pretty good for me, or something like to that effect. I don't know if you
Yeah.
remember it, but
I I I I try to stay out of those, but sometimes some things just kind of hit you, just like
yeah.
just it works, trust me. It's just the way you apply it. I mean, everyone has different ways of and different methods of looking at things. And people should go with what fits their personality and their risk tolerance and all of that. But it's it works because I've been using it. It I guess if you look at it from a just the indicator itself, you might not get a lot from it.
Right.
But every indicator to me has depth. There's like surface. So if you look at the RSI, the surface is overbought, oversold.
Mm,
That's the surface, right? It goes up, it's overbought, goes down, oversold, basic stuff. Great.
mm,
Might work, might not be a lot of information for that. But then if you look at the indicator and dig a little deeper, then you have divergences. And then there's another thing you can learn from them. But then I took it even further, and then I'm thinking, I want to figure out, measuring that psychology in the market, what can I get out of this indicator? And that's where my zones came
yeah.
from just a lot of years of experience and trying to figure out where where those hurdles. That's why I call it threshold theory.
Yeah.
You're jumping over a threshold, and during that threshold uh, is when the emotions are the highest. Anxiety. People are trying to figure out, what do I do, and they jump to conclusions. They act too quick. They don't think straight. I mean, your mind starts messing up. So, but what I was doing was I was using that indicator to find when those big social mood mindset changes are. And then you can do that on different time frames. And so to me, every indicator has depth. You just
Mm.
have to put some analysis and some just work behind it to see if you can get more information out of it. And that's what I like about TA is that depth of everything. You take whatever indicator you have, you got your surface, and you can find a whole bunch more if you do some research and actually, dig down in those rabbit holes, and you'll be surprised what you find.
Yeah, man.
That's what keeps me doing it, because you're finding patterns all over the place in all these different time frames that that nobody's looking at. You're
Mm.
like, and there's patterns being made. I'm like, what the hell is going on? It's like this phenomenon that I can't explain, but it works. It's just one of those deals.
And you know what's so funny and why I love your stuff is because it's not only looking at your own analysis, which you trust implicitly, it's
Mhm.
the it's and this is the thing that new people really, really need to hear. You can just choose your Bollinger Bands, you can choose alphanumerics, my indicator, you can look at
Mhm.
Fibbo's work, but you're missing the point if you're just trying to, it's like, I want to buy and sell signal. You're missing it. You're missing the layer that you have added over the top is your entries, exits, stop losses, position sizes, risk management. These things that are not sexy, but I mean, I watch you have multiple entries into your range. I watch you have multiple exits. That's how you're doing it. You're not just like, it's not just a buy and sell signal. There's multiple layers on multiple time frames in probably multiple exchanges in multiple different things going. I released a video a few weeks ago called um, diversified trading within a single asset. And I go through the 10, I just trading just Bitcoin. I have 10 different kinds of timeframes and accounts and different like leverages, spot positions. There's so many
Yep.
different things going on within a single asset. And you probably agree with me, right? That's it's about the risk management and entries and exits and stop losses, everything.
Yeah, absolutely. I mean, you nail it right on the head, because it's knowing that entry and exit and stop and everything before you even get in. It's like you have a system, and it's like, all right, now you got a system that's telling you to do this, and you already know what everything's going to be, what your risk is, how you're going to manage it, all of that. And that to me is more important than anything else.
Man,
Once
man,
you got to know that.
I say all the time, I never care about my entry. I just care about where I can admit I was wrong. So I figured that out first. So you know what I mean? Like I'm like, where my like, not even a stop loss, but a mental stop loss of where the trend is no longer good for me. That's the first thing I'm looking for. And the nearer
Yeah.
we can get to the mark price to where that price is the happier I am. Do you know?
Yeah. I'm probably a little even more weird than this. Than I don't even care about price. I don't even look at price.
Yeah.
To me, it's all about the proportion and the patterns that I'm trying to find. The price is just the entry point and the exit point to me. I don't care what the price is. I'm looking at the proportions. I want to know where those support and resistance levels are. I don't care what the price is. So when the system hits,
Mm,
then the price comes. Then that's
right.
a factor to me, because then it's secondary. It's not primary.
Did
My
you
primary is the technical analysis. The price comes second.
did you ever meet or did you ever have any connection or have you ever heard of Tyler Jenks? Did you ever know Tyler?
I met him a couple times.
Right.
Yeah,
He would
just
just
briefly.
briefly.
Yeah,
Yeah.
yeah.
Yeah, really good
But I
man.
know his methods,
Really good
and I
man.
know stuff. Yep.
He would when he would look at the long-term scales and charts stuff, just turn the price off. He wouldn't even have on trading view, wouldn't even look at the price, have the price on.
Yeah, I mean, price really doesn't matter to me. It, it does when you start getting into risk management and you got to figure out your levels and your exposure and all of that. But that's secondary, because
Mm.
you have to do the analysis to know where you're even going to start to begin with, and then it it becomes the price for me. But I don't know. That's just the way I look at things. It's not a right or wrong. It's just the way I approach things.
There isn't a right or wrong. If there's a right or wrong, then those books that they sell in the shops would mean more. All
Yeah,
right, next question.
bring it.
Do you do you still or did you before when you started? It's a hard question to ask, but do you still get a buzz from trading? Like, do you still love it? Is it, do you still get it like
Yeah,
if you have a winning trade, are you still juiced or are you pumped or
yeah,
it
yeah,
means
yeah. I
nothing to
do.
you?
I mean, it's you would think it would start to die off. I think and to me, it's really not about the profit. I mean, to me, it's like if you do anything in life, if you enjoy what you're doing, the money comes later. You know what I mean? You shouldn't focus on making the money. Focus on what you enjoy doing. And I think to me, my passion has always been learning more and more about, you know, reading charts and trading charts. And I've always liked doing that. And to be honest with you, I'm still learning. That's why I like having a community that I'm in, because I learn from others and they learn from me. And it's like, I want to make things better and learn more. Um, so to me, I feel like the analysis and the time that I put in, if I find things that actually work, twofold, it helps me, and then I also like to help others. People that are learning and want to learn about different things. I love doing that. So I think not necessarily being right, but it's more along the lines of that fulfillment of
Mm.
studying and learning something and seeing it come to fruition. That kind
Do,
of thing.
do, do you think that was one of my questions that were coming up? Do you think that the future for Fibbo Swanee is going to go? Do you see yourself in the future taking on going more that way into the education space, or what do you see
Yeah,
for
yeah,
yourself moving forward like
yeah.
that?
That's the kind of the transition I'm in at the moment.
Mm,
I'm more along the lines of wanting to take a lot of the stuff that I've learned and just kind of help others. So I teamed up with TWC with
mm,
Christopher Inks, and just kind of put all my stuff with him. I think as I get older, I think it's going to just go into more of mentoring and educating and kind of paying it forward.
mm,
Because when I first started as a trader, I was in sink or swim and I had to figure it out. Made many, many mistakes, lost much money. Everybody kind of gets into that, it kind of gets away from you, that kind of thing. But I didn't really have anyone really to go to. I mean, you talk about the market wizards, and I read their books, and
mm,
you can do that, but I didn't really have like anybody to really learn from. And I wish I would have had that. So now that I'm here, I feel like if I can educate in some way, and any future trader that wants to be out there, I feel I have some wisdom points that I could help with. Now,
mm,
you don't have to mirror exactly what I do, but I feel like there's little tidbits out there that you learn from experience over the years that I could teach somebody or at least explain to them. And it doesn't take them 3 years to figure it out. It might take them 3 months instead of just, it's the time factor. Because I feel like if I had that, I would have learned so much more, so much quicker, and be more mature
mhm.
and more, and be a more adult in the room and learn from that instead of just being this, wild west and yeah, let's do this, let's sell this, let's buy this, and next thing you know, you're like, oh,
Mm.
that didn't work well. Maybe I
Well,
needed to start managing this a little better.
well, there's two great points here. I grew up. I'm nearly 40, so I'm not saying I'm a young buck, but in this room maybe I am. I
53 right here, 53.
I I grew up when I started trading, I had all those resources because I had Tone Vays and Tyler Janks and
Hmm.
yourself. I had these guys to get me through the door, and it meant so much to me that I didn't have to go through those horrible steps. But it's a double-edged sword because there's so much bad stuff as well out there that's not valuable and it's counterproductive. So it's kind of both, like in that
Yeah.
sense, I suppose. Fibber, we've
Yeah.
got we've got 10 minutes left, so this is going to be part one of this show, and then I'm going to
Okay.
close the show and I'm going to reopen Zoom again to get another 1 hour in because the thing just popped up on my screen. Final question of part one. I'll tie them together in the post. Final question.
Okay.
Does any before we go into your analytics, so stay tuned for part two. Does any trade stand out for you, win, lose, or draw from your past? Like you might have won big, lost big, but something that sticks in your mind that was a great lesson that you took from it.
Good question. Um, I think when I think back, when I was when I had that open account and I could trade whatever I wanted, I learned a couple of things really just from the S&P 500 alone. there was, I was trading some commodities and, you know, basically any commodity there was. And then I went over to the equity side and I started looking at some of that. And I started to go into the S&P 500, and and I had a well-funded account, so I could actually do full, you know, futures accounts instead of the e-minis and all that. I actually jumped right in and started doing, full accounts. And I'm thinking, okay, I'm doing this, blah blah blah. So I'm like, all of a sudden, I go into the market and my system worked really well, and I put in a bunch of orders, and the S&P 500 rocketed for like 5 days straight. I made so much money. It was ridiculous that I'm like, wow. So I think what I've learned from this is I kept going with that same pace and not
Yeah.
learning how to manage it,
Yeah.
and I lost it all
Yeah.
and some. Absolutely, just got obliterated.
Yeah.
Like, so to me, the
Mm.
S&P 500 is one of my largest profitable trades ever, and
Fabulous.
one of my biggest losses. After I got hammered and then losing on top of it, and going to your boss at the time and saying, hey, that kind of stuff. The uh I learned right then and there that risk management needs to be something that I need to learn. And then, because I was just Wild West trading, and just probably getting lucky at
Yeah.
the beginning, but that, to me, is right with that was the point in time, I think, where I said, okay, there has to be some kind of risk management here. And then I started jumping into the risk management world, and then I was running a risk management area in the company, and then I went over to the energy side as a risk manager for about 5 years. And then what I noticed then was a bunch of clients needed help trading. So I'm like, so I created a position where I'm at, and I've been there ever since. And I basically help Fortune 500 people trade their
Fan-
energy. So
Fantastic.
so I'm trading everywhere, everywhere I can be. I'm trading something.
Thank you so much for
Yep.
sticking with me, Fibbo, for part one. Part two will be brought to you by the time this thing loads up, and we'll be straight into it. Have a break. I'll see you so soon.
All right. Cool.
Welcome back to part two of Trader Talks with special guest Fibbo Swanee. In the first half of the show, we went through Fibbo's history, and I enjoyed that so much. So now we're going to, especially with the price moving on Bitcoin, I can't wait to hear what Fibbo has in store for us right now. Take it away, mate.
All right. Let's go. Let me share my screen so we can look at some Bitcoin here.
All right.
All right. Make sure I get the right one. All right. I think you're on the right one.
Yeah,
Is it?
that looks great.
So you can see.
Yeah, Bitcoin 1 hour.
All right. Cool. 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 All right. Yeah, I just thought I'd go through the time frames real quick. Um, I don't really trade the hourly, but a lot of people in my group like to see it. So I just kind of updated it for them to kind of see where we're at. We did go into like I said before, when the RSI, I kind of dig in a little deeper. I get bull and bear zones. What I do is I kind of historically look back on the charts and analyze where a lot of psychology changes are, and it has to do a lot with different fib levels, different trend lines, different things that I want to measure historically, because I'm trying to measure where that psychology changes are. And what I do is I look for a best fit zone of where those happen, and that's why when you go from bull to bear, that's really what my main thing I'm looking for possible starts of trend is what I'm looking at. So right now the hourly here broke into the bull zone here. So as the RSI pops up into that area, with this one it's 6408. Once I got above that level, you get into a bull zone, and then I start my fibs based on where the ADX is. We don't have to go into all the details, but when the I start my fibs here, And then right when this goes into the bull zone, it was a buy. So you're probably buying it right around 44 or so. And then that first target, if you wanted to, was at 45.6 if you wanted to trade it there. And then what I do is it's a stair stepping thing. If you get up to a target, if it comes back down to wherever the shallow fib is, and right now it's way up there because we're way up at the top. The shallow fib would be the area on if it corrects back, that's where you want to buy it, and then you want to kind of buy it there, go to the next target and sell it, buy it again, sell it, and just kind of take profit as you stair step, and then eventually, if you're long and you don't make a target, it might go back down into the bear zone, and once it gets into the bear zone, then you sell out, and if you want, you can go the other direction and go short. I don't really play the short side unless the weekly or a long term is in a bearish state, and then then I'll be working the other side. But as long as the long term primary trend is bullish, I will play the bull zones, and then I will buy on major dips in the bear zones. But right now, what's happening is we made this first target, and then we were popping up, and then the next target here is up around 48.7. So I'm just looking at this as a guide of where things could head on a direction. I don't really trade the hourly, but when you go into the 4 hour, uh, this is one of my major trading is the 4 hour and the daily. And what I'm looking at here is we went into the bull zone right at this point. And another thing that's part of my formula is once it goes into the bull zone, I mean, we had this bear zone back here, and you can see the red fibs on here. So when it goes into the bull zone, one of the rules, it has to trade at least 3 consecutive settles, and this is a 4 hour chart, so you need 4 candles that trade above the previous shallow fib at this 38.2% level, which at this point in time it was 41,409. So once this went bull, I needed to see 3 settles above that. And we had that 1, 2, and then we had the third one here. So you would have been buying somewhere right around in this area. And I typically just go to market and just grab my position because then I'll know where my next levels are. And as you can see, if I bring this down to where we were, um, you would have bought right in here. You probably the first target would have been at 43.2 just off that little trade, but it didn't make it. But since that made a new high, it came back down, and then I bought again at this new shallow fib at 42, so I was long again. And then it went up to this price right here. Then I took profit at this level, which is the 61.8% level that I use off the prior area. And then it came back down, bought again at the shallow fib. Yeah, it dipped down to the 61.8% level. But then you remember you got a couple other buys in here. And then it started to, just go sideways for a while. And then it started to kick out. So now the 100% at 46.1 was another target to where I took profit. And now I'm still long a little bit from previous. And then my next target's is up there around 49.1, which I use the fib extension levels. Once we make something above 100%, the 127 to 141 is, when I've back tested stuff and historically looked at analysis, those are the zones that work best for me, that if it's going to reverse off of, this bull zone that we're seeing, if it's going to reverse, that should be the first stop. And then we should see a major correction from that point. So right now that my fib extension target's within this zone, which matches up with this previous high. So that's where my order will probably be sitting in just below that, just to get the next profit target. And then if that happens, then we'll get up to that level. And then the new shallow fib would be right here at just around 46. So if it corrects back to 46, I'll buy again. And then my next target is the 200%, because usually if you get on a bull run like this and you get above the 141%, if you get 3 consecutive settles above that, your probability of going to the 200% it runs pretty high when you look at it historically. So that's why, I'll be taking profit within that zone And if it keeps running, oh well, but I'm taking the profit and I stick to my system and go from that point. And right now, with everything that we're seeing at the moment on the 4 hour, you know, RSI is getting into that overbought conditions, which you know, can stay up there a long time, but right now it's something to watch. But really, it's more along the lines of when the RSI dips back down below or gets back down into where I measure the bull zone. That could be a red flag, as you know, maybe this thing's done. But right now we're kind of up over it and kind of watching it. Momentum on the ADX really strong for the bulls. So I feel like that target up around that 49-ish area could happen, and maybe we wick up to that point and start coming back down. But right now, that's what I'm looking at on the 4 hour, to where hit a couple targets, took some profit, still got some exposure. So I'm happy to let this thing kind of rock and roll if it wants to keep going.
Man, I'll just jump in for 1 second.
Yeah, yeah, no, yeah,
That's so cool. And you know, I'm a big proponent of the 3 day time frame for Bitcoin. I use a 3 day time frame every
okay,
single day. That's from you. That's from you. Because
nice.
because I know you're looking at the 4 hour time frame, but your 3 consecutive closes, I just bumped that to, instead of 3 daily consecutive closes, I just
Yep.
bumped it to a 3 day. That years ago, I did this, and it's been fantastic for me. So I thank you for that.
No, that's awesome. I mean, a lot of people have different, like, I call it filtering, is what I call it. In I mean, it's not what I call it. When I studied for all the different exams and all that, filtering is, you know, if you have some support and resistance of some sort, and it's a, um, you know, maybe it's a trend line, you know, or whatever, um, price can go above a trend line, right? And just because it goes above it doesn't necessarily mean it's broken. So you need to filter it somehow. And my experience and the analysis that I look at is, and I feel like, I mean, there's probably other ways of doing it. Maybe 2 day settle or 3 day settle, or you have to have some kind of formula to give you the comfort to say, okay, support is broke and now it's resistance, or resistance is broken, now it's support. And to me, I've always found that 3 period rule. So if I'm looking at the 4 hour or even the daily here, I'll be looking for 3 settles above certain things, or it would be 3 daily candles or 3 4 hour candles. So it's really it's a period time. So whatever you're looking at, even if you're doing a minute chart, it would be 3 minutes. You know, you'd want to see it at least 3 minutes, those kind of things. That's what I like about technical analysis, is that fractal in nature, right?
Yeah,
No matter what time frame you're looking at, it's all the same.
it's all the same, and then it all goes back to position sizes. The position size you put it on a
Yep.
3 day time frame is different to the 3 minute time frame.
Yeah, yeah,
You know,
for sure.
it's all relative, and that's the spiraling into the Fibonacci cycles,
Yep,
isn't it?
yep. That's what I love. So daily, so the daily, when I did Crown Show a little while ago, I was in what you would call liminal space, and I know you've heard that term, um, and what it is for me, because I mean, liminal space in the world. If you ever been like in a uh, like a like a subway or a hotel, like a long hotel hallway, and you're by yourself and you have that eeriness, that I don't know how to explain it, but it's like you got that weird feeling of like, I mean, they call
Yeah.
it liminal space, but it's hard to explain.
No,
But to me,
have you seen the is it the back rooms, the art? You know, where they go. Type in
yeah,
liminal
yeah,
space? Yeah, I love all
yeah,
that
yeah, yeah,
stuff.
I know what you're talking about.
And
So so to,
anyone who's watched my stuff knows that I use the word liminal space and credit you all the time, weekly.
but it's a major psychology thing, and from like books I've read, and speaking of books, read more psychology books than trading books. I'm just telling you that right now. But the uh so to me, liminal space is when you're in that space in the real world, you get that eeriness and you get your anxiety levels kind of go up, like what's going on. So to me, it's the same thing in the trading world. So liminal space for me, right before this happened, before we went into the bull zone here, was the 4 hour was in a bull zone, but the daily was still bear. And to me, you're kind of in that what the
Liminal
hell's going
space.
on? Are we going to go up? Are we going to go down? And that to me is that spot where anxiety is the highest, emotions are running high because everybody's like, it's going to 50K, it's going to 30K. Nobody knows where it's going, right? So you have to look to other things to try to figure out where that's headed. And now that we're in the bull zone on the daily, we've leaped over that threshold. And that's what I want to measure is it took a little bit of work, and we bumped up against that bear zone on this chart here. It kept hitting, and we rallied up, kind of hitting this 43.9 area or 43.7. We kind of wicked it a few times, and it wasn't going, and we're still in the bear zone. And I'm like, well, the 4 hour is bullish. We're still bear. And I'm like, well, what's going on? So for me, I take all that emotion out and I just sit back and I wait to see if the overall social mood is ready to take on that next step. And they did. And boom, we're in the bull zone. And as soon as it hit bull, it would be on this candle. And here's the previous shallow fib back here. So we're already 3 settles above it. So as soon as it clicked in, you would have been buying right here on this open at about 44.3, getting ready for another run to the upside, because that extra buying interest or whatever came into the market, and we all leaped over that threshold. And now we're in a different mindset. Now we're in this bullish mindset to where my 4 hour, my daily, and my weekly are all bull. So now it's a little bit more comfortable. Now let's kind of take this on. So right now you would have bought and actually would have took profit this morning at the 100% level. That's where the target was. So when you move this up, shallow fib now is at 45.8. So if this actually comes back down to around that 46-ish area, that's going to be the spot for me to buy again for a move back up to the next levels, to where I look at the 127 to 141. Somewhere between 49.6 and 50.8 will be the next target, if it wants to continue trend. Now, a lot of people ask me, well, what if it keeps going? Well, if it keeps going, then I'm still long from other positions. But if you just started and you got in this and you bought and you sold, and you're out, then you're either going to do two things. If it corrects back to the shallow fib, that's your new buy entry. And then your next target would be up into this zone, which I haven't figured out exactly where in that zone, but that would be the zone at the moment. Or if you get 3 consecutive daily settlements above your previous target, and in this case it's 47,259. If we get 3 settles above that, that will be a signal to buy to continue that trend. So I would rather it come back to the shallow fib, don't get me wrong. But if it doesn't, then you want to wait for a filter of what is now resistance that you want to flip to support, and then you will buy it going forward. And sometimes, sometimes it runs up and you'd be buying it at 49 or, but if it ends up running up really high and your third settle is up in this zone, then you're going to be waiting for that next zone, that kind of thing. But that's where I'm at on the daily at the moment. Got in, made nice profit. Now we're just kind of waiting to see if we're going to be buying on the way up or the way down, that kind of thing. So, but the interesting thing here is, if it's going to hold and reverse, this could be the spot. This could be the spot where it stops and kind of comes back that way, because for a couple of reasons. And one of them, let me go to the next chart on the weekly. One of the things I was looking at here on the weekly was this shallow fib here as it was coming down close to that 38K. When I was in that liminal space where the daily was still bearish, but we were still long-term bullish, this level to me was pretty key for that to hold and continue the move to the upside. Or since the daily was in the bear zone at the time, I was not having as much exposure. I wanted exposure to the upside, but I wanted to keep my exposure a little low in case this thing broke down and ran all the way back down to that 31K or that area a lot of people were looking at, which would be the 61.8% and this trend line connection right around this point. Now a lot of people are asking me, is that still possible? And right now I think so. And the reason for that is we haven't really broke. Let me look at see if it's on this next chart. I don't know if it's on the, yeah, here, like this one, for instance. This 61.8% level right here that we came up and tagged, which was basically the high here from 69 down to the low of 15.4.
Wow.
The 61.8% levels right there at 48.5-ish. Came up, found selling interest, came back down. We had that weird, you know, kind of a bearish spinning top if you're into
Yeah.
candlesticks.
Yeah.
Ooh, I like that sun. It's making me woo. But the that's key to me to where we can come up and retest that. But if you look at the low to low to low here on the monthly, we still have a low possibility in April, which is really coming in at that halving time point.
Mm.
So to me, the risk is still there until we break above this 48.5 and break that 61.8% level. Now, how do I got something that's covering up my how do I get my my next one here? Is there a way to get rid of this thing?
Oh yeah, just sort of hover a bit and then it'll disappear. I know what you're talking about. That's bloody annoying. Hover under it and it'll
Oh,
pop
under
back
it?
up. Yep, and it'll pop back up and then you can click sneak in.
Okay. Yeah, I can't get to my next screen. Um,
It's the zoom, like, do you want to stop screen share, isn't it?
yeah.
Yeah, you can just hover under it. Like go don't click on it, go under it, it'll slide back up.
Okay, here. Yeah. I can sneak in here now.
Yeah.
Here we go. Sorry about that.
No, that's all right.
Uh,
That happens to be every day.
yeah, one of the things that I'm looking at, and the reason that I'm saying that the risk is still there to a possible down to those low 30s, is not to say that it will happen, but I want to kind of leave that risk open for now, because we're right at that level. Because if you look at this chart, there's a lot on here, but the main thing I'm looking at right now is, um, once we broke this trend line, back here in 2015, we broke the trend line, came back down, retested. Once we retested, we have that 78 bars to where it makes a new high. But one of the things that I've noticed that when you're in this realm right here, and even on this one, when you break, and then I have them highlighted in here. Once we broke this trend line prior to the halving, we have never traded back above the 61.8% level. So right here, it held and then came back down. This one came up and held right here and then retraced all the way back down to where the break point was. But then if you look at where we're at now, we broke the trend line. We have 78 bars to the halving, or same pattern.
Mm.
But what I'm looking at here is we're at the 61.8% level. That's the level that you saw on that monthly deal, to where I mean, it's not a huge sample size, but at least you can see never traded above the 61.8% before the halving, never traded above the 61.8% before the halving, and we're right there. So
Mm.
to me, if that same kind of pattern is going to happen, we could still retrace and correct back before, into the halving and then going from there. So that's why I want to leave it open.
Yeah.
But once we get above that 61.8% level, and especially on the weekly, I'd want to see 3 weekly settlements above that 47.8 or wherever that level is. And then let me see where the level is. 48.547.
Mm.
We get 3 weekly settlements above that. Then I think then you're just opening a movement all the way back up to the previous high.
Yeah.
The all-time high.
Yeah.
But
But
but that's a lot of
the
ifs.
window's
It's a
still
lot of
there.
ifs.
No, I
Yeah.
love it. I love it. There's still a window there and it would match. That's crazy. Mm.
Yeah. And another thing that I was looking at was this. When you look back I was looking at trend lines from the halvings, and I look at this trend line, and then it started to break down, came back up, but then the 61.8% level of the halving to the high right here is at 451, and then the next halving started at that price.
Yeah.
And then if you go the same way here, the 61.8% level started at that price. So if you go to where we're at today, the 61.8% level is at 31.3, and the halving is right here. So is it going to start at that price just like it did the last two times? That's why I'm leaving that risk open for right now. Now, if we get above the 61.8% level that I was just talking about on here, getting above it here, and that just opens up a whole different ball game, because then we're in a world that we've never been in before.
Yes.
Then it's a whole different look.
Yeah.
So we got to kind of look at it that way. And then I got a couple other charts in here. I like to look at the psychology swings and those kind of things, to where you kind of dip down into this area, and then we start breaking a trend line, and then start working our way to the upside. So you get this increasing mood, then you get up to that peak positive mood, and then we break trend, and then we start going down in here and get into decreasing mood and fear and depression, mistrust, and who knows what in the hell's going on.
Yeah.
But now we broke a couple of these trend lines. We broke the blue one here, and we hit the target of the blue, because I like to take the furthest part underneath the trend line to the trend line itself. And then once it breaks out, you take that same measurement, and that was the 61.8% level. It broke out, came back down and retested right here, but then we started to head higher, and then we hit target. So we're at that target now, came back down, kind of retested that shallow fib. And now this is that area that I'm talking about. This, if it's going to hold and correct back into the halving, now's the time it's going to happen. It's going to happen around this time.
Interestingly, if we continue on, the peak,
yeah, then it's
but,
sky's the limit, because
but the peak positive, overconfident, euphoric trust will come in around the halving.
Yeah, exactly. And then the other thing I'm looking at is this trend line with this red one. So, and then I'm measuring this one, and then from that break point, basically I'm measuring the 38.2% level. You could actually move it down to measuring the same. It's not perfect. I just kind of wrote it, got it in there real quick. But if you put it at the
Breakout.
breakout point, in other words, once this broke, the target is a new high, up into the 70s, but that doesn't mean it's going to go straight there. Like, in other words, this could hold. We come back into the halving, hold this trend, and then work our way up and hit the high. So that's why I don't really know what's going to happen, and nobody really does. But to me, it's that we're at that level now to where if it does get those 3 weekly settles above that 48.5, then I'm saying all-time highs next.
Yeah.
If not, then we go back to maybe 37. Maybe it corrects all the way back down to the low 30s. I don't know, but I'll be ready, because when we look at my systems and stuff, we're starting to move a little higher. That's nice.
Yes.
So if this starts to come back down and get down into the low, starts correcting, this will go back into the bear zone. Then I get back out, and then I'll look at those targets when everything flips the other way. And then we'll find ways to buy while we're in the bear zone. But right now, one of the reasons that my daily has a target here at 47.2, for a couple of things, it's resistance. We have that long-term resistance at the 61.8% level. So selling could come into this area. So we'll see. But right now, everything's looking bullish. So, ride it and play it and make profit. And that was the only other things that I had was really that concept of possibly getting back down to where where that level is at 31, just based on history and trend. And then same thing here, just looking at different patterns and different things. We're right at the resistance point along this midline here, to where it could start to break back down into those low 30s on this trend line here. And one thing I was looking at was I have this, if you take the low, just starting at the low here and looking at this first leg, just looking at it like this, I just put this line on there.
Yeah.
And then you had this
I bet
period
it
of
matches.
consolidation. Huh?
I bet it matches the next move as well.
Yeah. Well, yeah, you get in this period of consolidation, and then you go to this next level.
Yeah.
And it matches right here. So does it correct back down to this point? And if it does, just to say it even does, if it comes all the way back down to this point, and then we consolidate in here, and then we get to this point, then you're looking at 69. You're basically looking at the high, the previous high. Or if we end up getting 3 settles above this, and then you're looking at this period of consolidation, and then it just wants to take off from here, and just say we get the 3 weekly settlements, then you're looking at 89, 90. So you're looking at like much, much higher prices.
Well,
So
let's do that one. Let's do that one. If you're gonna
yeah,
pick,
yeah, let's just do that one. But that's what I'm looking at. Like, and that's why I follow a system that says once you get to a target, sell it, do it, because that's your strategy. Otherwise, wow, I'm really dark.
no, you're good, mate.
Yeah, I just looked over at the picture. I'm like, whoa. But but that's what I like about it is you get to those certain resistance levels based on historical patterns, and the fibs are really what I like to follow. Take the profit. If it comes back down to the shallow fib, buy it again. It's set up. I wanted to find a system that's easy to just use, and kind of uses traditional just RSI, ADX, fibs, price action, trend lines, just basic shit that it doesn't take a rocket science to figure out, because you can just get so much in depth of so much going on with so many different things. I like to keep it simple, and I finally found a nice little simple way of, you know, writing trend. So in other words, it's set up to where if it goes into a bull zone, comes right back down into a bear zone, it's a small loss. But if it goes into a zone and it's a good threshold and people start getting on the bandwagon and the trend starts forming, that's where you get double digit percentage gains with really small single digit losses. And that's really what my whole goal was to get a nice little strategy. Now, is it foolproof? No, there's times you take losses and all that, but in long term, when you do back tests, long term, if you continue with it, take the targets when they say to take them, and get in your entry, get in your exit, have your stops, all of that. If you just stick to that, it works. And,
Pivo,
and,
I think you've done it, mate. I think you've done it here. I mean, just in summation, what you've identified here, you've got a low target if we correct. You've got a breakout target if we go higher, and you're able to manage a position on a 4 hour time frame within it. Also adding the fact that you are trading multiple accounts and multiple time frames and running trades, multiple different trades running at the same time. You're covering bases. This is exactly what I love as well. It's brilliant.
yeah,
Brilliant.
I mean, it's work, but I enjoy it. Like you said, like some of this stuff isn't pretty, right? You gotta kind of work your system and do all the back stuff that's not as fun, right? But but once you have that established and you start doing it, and it becomes a little easier. But yeah, I tried everything separately.
Mm.
I'm weird that way. I'm old school. I like to dig. I don't do any algos at all. Not that it's wrong. I think people, if you like algos, go for it and run with it. I like to be in the chart, and when I go into the RSI and I trade the zones and I'm looking at the numbers, and I like to be in the charts. And that's just me. So I'm old school, but but I trade everything separately. So if I have a 4 hour on and a daily on the BTC, and I have a 4 hour on ETH and a daily on ETH, they're all being traded separately, because to me, they're all different psychology buckets going on. Like there's different reasons that people are buying and selling a 4 hour pattern versus a daily pattern. I know this all sounds weird
No, it doesn't.
and psycho, mumbo jumbo stuff, but like it's a weird phenomenon that I've been trying to measure, and I enjoy trying to measure it. Um, so when I talked about being in college and they had that one chapter on technical analysis, what has changed since I'm old, and colleges are a lot different now. If they had this major that they have out there now, it's called behavioral finance,
Mm.
and that was never in existence when I went to school. Um, there's little tidbits of it, but now there's like whole studies of it, and I guess you could put it under the realm of technical analysis, because to me, technical analysis is measuring the psychology of the market and learning from that, um, and going from there. But um, but that's where I'm at on all of this.
All right. Okay. We've got 6 minutes left. So I want to
Yep.
finally, well, one of the previous charts you had, I think it was the monthly time frame.
Monthly.
It was
This one.
across further. Keep going to your right. Yep, there. All right.
This is
On
the 8 day.
the 8 day. On
Yeah.
on Monday, the 17th of November 2025, are we going to top out on Bitcoin?
Yeah, based on this, I have a high to high here. So if you do the high, and then the next high, and then the next high, so it matches nicely. So if this pattern holds true based on the sample size that we have, this next high would be November of 25, and then I just kind of use the, just looking at a curve or whatever. So it gives you a range depending on what kind of curve you're looking at. You know, I get a range between 124 and 300K. You know, I like the 124. I don't have the chart up here that gives me. I have a couple other charts to where I have some fibs that give me some extensions, and those extensions kind of run between 118 and 130, depending on different patterns that I'm looking at. So I kind of like that 120ish area. So I could see 120K, by November of 25, if this pattern holds true. I mean, it could kind of go all out of whack if we start trading above the 61.8% level that's never happened prior to halvings.
Yeah.
So to me, that could throw this whole thing into a whole different way, of what, based on earlier patterns. But if this holds true and we kind of come back down and we retrace going into the halving, and then we start going back up, and then we hit the all-time high, what was the number? How many bars is this? So is it 78 bars or no 100? I don't know how many bars, but you go from
78 bars. 78, 78, 78.
Yeah, that's from the break of the trend lines.
Oh,
I
yep.
was looking from the high to when it breaks the high.
Right.
It's always post halving. So to me, it measures out to be this area here, which is, October of 24 of. So in other words, we wouldn't break 69K until that point, if this pattern holds true. So in other words, we'll come back down, we'll make a low, we'll get back up into this area, and then we'll trade between 50K and 69K for a long time. If it's going to hold true like it did before. If we start doing a little bit more above the 61.8%, then maybe we get up above the previous high way earlier. I don't know, but if this holds true, then I'm looking at 120K by November of 25. I mean, based on this pattern.
All right, mate. Give me back the screen share. We got 2 minutes, 3 minutes left. So just to quote Fibbo Swanee, we'll be at 300K by the November the 17th, 2025.
There we go.
So set your take profits there. Mate, it has been an absolute joy to have you. I will link all of your personal stuff in the description below. So please send that through to me, mate. Please follow Fibbo's work. I regard him, if you trust my opinion, as the man, one of the men in the industries to follow. Absolute classic follow. Plenty of shit posting as well on Twitter, which is really fantastic. So
gotta have some fun every once in a while, right?
Yeah, why not, mate? Mate, it's been a joy. Thank you for coming on my first show and being my first guest. It was a real privilege.
Absolute pleasure. Thank you very much. It was fun.
Thanks,
I enjoyed it.
Thanks, guys. Talk soon.